good part about why I want to invest in a unit, the bad part about why I should not invest in it.
Any kind of new construction which is happening, even houses or units, whatever new construction is happening, you'll see on an average, the size is getting smaller and smaller.
When you look at the Metro, Brisbane and Gold Coast apartment markets, at this stage, the inventory is historically low.
I think Queensland's cracked it, like the apartment market is like going gangbusters there.
Welcome to the Property Portfolio Podcast, where property, finance and investing are broken down into real conversations, which have benefited thousands over the years. The show is hosted by leading industry experts who bring different strategies to the table. Parag Dixit, Chief Strategist of Infinity Financials and Prop Wealth, has more than 20 years in the financial industry and is consistently ranked among Australia's top 10 mortgage brokers. Mudit Khandelwal, Director at Infinity Financials, has 2 decades of experience and over 200 5-star client reviews. He's known for helping clients build strong property portfolios. Julius, co-founder of Prop Wealth, has spent more than 15 years in real estate domain. He is a lead data researcher and has helped hundreds of people create wealth through property investment. Subscribe to the channel and get regular updates on what's happening in the property market.
Hello guys. Hi, how are you?
I'm good. How are you?
Very good, Julius. Very good. How have you been?
I'm doing good. Thank you.
I've been well as well. It's been busy time, so enjoying the busy times.
Right. They're looking forward to getting into our vacations, looking forward to getting into how Christmas treats us, maybe taking some time off. You have some plans?
Traveling overseas, a few weeks off. So
all right, that's nice.
Looking very much forward to it. The kids are excited.
All right.
We'll be off to New Zealand by the end of December.
All right.
It's a good road trip, so we're excited.
Yeah, I know. I'm planning that as well. I'm planning to go towards Western Australia, go around the coast there, going for the first time. So this is super exciting for us.
Of course, it's a place to be in.
Yeah, I know. Just enjoy what our countryside has to offer.
Yes.
Absolutely. No, fantastic. So what's up today? Okay, we're going to look at units and how units and apartments have been doing across the country, how they've been faring, what's the good about them, what's not so good about them, and what's trending, and why are people looking at units, and what's in the horizon in the future. I think that's what we are all looking at. Anything else which you think we should be looking at today?
We will look at the long-term trends, the supply parameters, as well as how is the performance of the units over the period of time from last 3 years, historical performance.
Yeah.
How the market is going to be in future.
Yeah,
so we will go in detail about the unit markets.
Fantastic. That's nice. Nice.
Absolutely, because this question comes very often in a lot of conversations that what's so good about them, why not? So let's deep dive.
Yeah,
absolutely.
I know. Over these years, I think post-COVID, we've got so much has happened about units, and I think it had a boom in construction as well.
Yes.
Maybe a few years before COVID it started off, but there was a good boom in construction, a lot of noise, and it's for the future anyways, with the way Sydney is growing, with the way Melbourne is growing, with the way all the other cities, Perth is growing, with the way some point of time things will happen there. Queensland, I think they are the leaders in apartments and how people have been accepting apartments there. So that's going pretty well. I think lots have happened over the few years. A lot of bad news as well. A lot of dodgy developers, dodgy builders have come into the news. There've been construction quality issues. Heaps of examples. Let's not get into them, but heaps of examples of some real bad press, and some examples of some really good and nice and elite and very luxury ones also, which have been there in the market. So it's been a roller coaster with respect to image of apartments and units in this few years which have gone by, right?
No, absolutely right. It's been on both the sides, the goods and bads about it. And there's no stopping to how the number of units that have to come, because ultimately with the limited amount of land in most cities and being closer, proximity to the CBD becomes important, you have to grow vertically. So they are here to stay. But the question is that when you start thinking as somebody who wants to live in a unit, then what are the advantages or what are the not so good things about it? Or whether you're thinking like an investor, then is it a good investment? In the current times, does it make sense in a long term? I think that becomes more important.
True. I think that's the future of what it is, the present, the future, and why why is it doing good, why is it not doing good, and to understand about how people are really taking up at apartments because it's in the end it's easy. It's much easier on the pocket for first home buyers, initial investors, people who are looking at a lot of stuff which people think about, right, in units when they come to it.
Yes, so we could see a segregation of, historically there was a lot of investments happening towards the investor space in the unit, rather because the gap between the houses, the price gap between the houses and the units were not extremely, it was extremely higher. So like houses were extremely cheaper and then gap was moderate. So during that time, a lot of people were looking towards the houses, as well as the houses were in affordability range of the investors as well. The moment when we have seen that gap, the segmentation of that price gap have increased a lot over the period of time. Then for the investors are cash flow sensitive basically. So for investors, either the capital growth is a prime objective, but the yields are something which they are looking for it as well. The way the property market have gone up significantly in housing markets in most of the capital cities, we had witnessed that the yields on the property side, especially towards the houses, have dropped below 4%. Historically, the interest rate were in between 4 and 5%. And then because units were cheaper, the yields were attractive. There was a time during the COVID when units were cheaper, as well as there was not a lot of supply of the units was in the market. So that time, a lot of investors were started looking at the unit market as well. And we could see in the data that a lot of states have done significantly well in the unit market.
Absolutely right. And it's been a roller coaster. It's been up and down. It has seen its fair share of the good news, the bad news, the good part about why I want to invest in a unit, the bad part about why I should not invest in it. All of that has come through, and all of that has come in front of us, and things have come through. Both of the plan, the newer ones versus the existing ones, both of them had their own bit of thing. But I always wonder, when someone is looking at an off the plan unit, when someone is looking at a brand new unit and buying it from a developer, they're looking at a very different kind of a benefit when they would want to get from it versus someone who's looking at an existing unit which is there for 2, 5, 10, 20 years, and they're buying that. There are very different reasons why people get into that, right? So when you're looking at an off the plan or a new one, it's taken off in last maybe a decade. It's really taken off with so much of apartments coming into place. What's the real reason why people will go for such apartments?
Off the plan, you're absolutely right. But first of all, a lot of construction of units has started happening. 10 years, 15 years ago, number of units were much lesser. So one is the supply itself has increased, and the number of people who are looking for buying, supply-demand gap that we talk about. So demand is there. So one is definitely that. But at the same time, one main difference is that it's a completely new block, right? So the issues regarding maintenance, the one of the bigger costs about when it comes to units is strata cost. Now, when it's a new unit, then you would expect the strata cost to be generally lower. The layout is new, right? So, and then of course, location of where it is being constructed is important. So these are factors which people consider when they're looking for off the plan. So it's a project which is still to be yet to start. You can get something relatively, perception is that yes, because it is not ready yet, you can't see it right now. So you'll get it at a better price. Now, whether that's a different story, whether that perception is right or not. But then at the same time, the risks of buying an off the plan unit need to be weighed against it as well, because it's not everything that looks good. The building is not ready yet, and there's always a risk whether what kind of building will come up, whether there will be delays, what kind of construction quality will be there, like you touched upon, that there have been dodgy constructions. So these are the risks to keep in mind when people are looking for off the plan.
But I think the most important bit which has come through in off the plan or newer ones is the government schemes and the support which people get. The stamp duty waivers, government grants like first home owners grant, where you get some 10 grand or 20 grand, 30 grand, depending on various states. That money which you get, that government support system has really spurred the growth, and that's been a key driver of government's benefits which they are trying to give to first home buyers, investors in some states as well, where they take the advantage of that, and that's what has really brought off the plan into the forefront and into the mind space of people who they can then accept it. That's been a good support system, right?
Yeah, it is. But when we compare the investors versus owner-occupier purchases across the states in the unit market, in especially towards the off the plan, I could see a lot of hurdles. Like the stock has to be booked about 70%. Or that means you have to pre-sale those apartments around 70%, then only the project will kick off. So a lot of people book those. If that's not happening, then yes. So in off the plan, the completion rate is around 15 to 25% versus when you look at the existing one, they are readily available. And that makes a lot of difference between the off the plan and the existing apartments. Towards when we look at the off the plan apartments, there are a lot of either first time buyers and very less investors versus when you go towards it's a vice versa. So when you go towards the existing one, there are a lot of owner occupiers which are involved because there are a lot of people who can't afford to buy properties, and then if they would like to live in their choice suburb or because of the lesser deposit, they start something with the unit. So whatever the existing available, they start getting into the unit market. So that is for the living. For the investor, it's upon what kind of leverage they get. In a case, if yields are in their favor and if they're readily available, then yes, they look for the existing markets. But sometimes if they say, yes, I have a limited deposit, I'm going to settle it after a few years and then I still have that runway to go for, then people start choosing for the off the plan apartments.
But I think one more delay, like you touched upon, that delay in the construction, the apartment or the whole site and the whole project coming into play is has not been a great experience for a lot of people. And I think the 70% rule for getting a funding for that whole project for the builder and all the other such things have really contributed to that. But that's fair as well, to just ensure that the market is managed and then there is no undue financial risk in the market with a lot of projects completed and they are not able to sell, and then you get into builders getting into defaults and all that. But anyways, on the purchaser side, I think off the plan have been good. But another factor which I think has a difference between off the plan and the existing ones is the size of the newer ones which come in. Typically, people find that the size of the newer ones are a bit lower, smaller. The bedrooms are a bit smaller for the similar kind of a layout versus the existing ones. And that's where the popularity of an existing ones are. Besides the certainty that I know this apartment is there is no reason for a delay. There is no reason why it's not going to be there. I know it's there. I know the price. I know the suburb. I know everything. And I know how it's going to fare. So that certainty also brings us one more thing, which is the kind of a layout, the size, and I can measure. I can get my king size bed into it or something, or I can get my bedside table as well, and I will have a study room and I'll have my laptop or my gaming console out there as well. Right?
You're right. The demand pressure is going to reduce the sizes of houses. So any kind of new construction which is happening, even houses or units, whatever new construction is happening, you'll see on an average the size is getting smaller and smaller, and that's bound to happen with the kind of demand, population increase, migration that we are seeing. So you're absolutely right.
Yeah, and size does play a role. Size is important, and you need to live a bit comfortably. You can't be constrained and into a pigeonhole or in a cage or something. Some of these apartments they're shocking, which they've come out and which people have, which are being sold, and a lot of times they don't find buyers, or a lot of times they find buyers, but those guys are pretty disillusioned when they really get into it at the end.
Yes. And more so when you talk about those high demand choice suburbs, because of even higher demand there, you see these issues of layout even bigger there. So absolutely right.
And see, one key thing which apartments have bought, whether off the plan or existing ones, is the proximity. Most of them are now, the new ones are definitely getting constructed around the transport corridors, where you will have a metro station being created or a train station being created, and government is trying to ensure that a lot of apartments are coming all around it, so people have access to transport. They will have a market or a supermarket being created nearby, the good big mall coming up nearby, so that proximity to what all you need for living, proximity to the area, proximity to transport, so that you can go to your work, you go to your business and go to meet your friends and family is easily available. So all that bit is definitely there with apartments and units, which is a big plus. Whereas when you get a house, you may be few kilometers away, then you have to drive down and then you park and then you do all that. But here you can just jump onto a train or something and then go where you want to go.
So the trade-off between the lifestyle and convenience versus the size of it, that is definitely the trade-off we're talking about. 100% correct.
Yeah. And there's always a sacrifice. There's always a good and a bad about it. But that's been a good driver for the way apartments have come up, and that's been a good driver for the growth in the apartments in the last few years. And we've seen that apartments have grown pretty fast, pretty quick in the last few years. And in fact, post-COVID, there has been a different trend in apartments, right?
Yeah. So it's pre-COVID and post-COVID. What we have seen is there's a massive change into the apartment pricing. Up to 2022, the cumulative price growth across all the capital cities is less than 5%.
Yeah.
But between 2022 to 2025, if you look at the statewide, then Perth have gone up around a cumulative 28%.
Yeah.
Brisbane is around 26%. Adelaide did 19%, and Sydney was around
9% roughly.
9% roughly, and Melbourne was little less. Then that is because the extremely short supply of the inventory also.
That's right. Yeah, okay, that's very interesting. So what COVID did was, because it sucked the life away from every one of us, it stopped us. It stopped the whole world in a particular way. I don't know whether we'll ever see such kind of a sight again, or maybe our next generation will ever see that, where the world stopped. There's no transport, no airline, there's no buses, nothing. You don't do anything. You just be at home and go for a walk or something, But anyway, so that's time when all apartment construction stopped and the builders were into an issue. But that's changed. But still after that, that's a phenomenal thing. When you're talking that there has been a growth like 30% cumulative, that's an average of 8-9% growth in value in apartments in Brisbane, in Western Australia. Has been phenomenally good, right? But I think the laggards have been Sydney market and the Melbourne. Melbourne market has been a bit too bad when it came to it, in the sense that it's been the worst, I suppose, of all of these markets, right?
No, absolutely. Melbourne did not grow that much. In fact, I have data in front of me. I came prepared for this, right? So Melbourne did not grow so much, and this was. We are looking at a 2, 3, 4 years kind of data right now, right? And especially because of post-COVID, construction pipeline became so dry that the supply has been very short. But going forward, I think what is important to also understand is that the prices grew because of a reason. There was a very, very high supply shortage. But now it's been few years, and the pipeline is improving now. Now, whether going forward, are we going to look at something similar? If we're talking about 8-9% growth year on year for cities like Brisbane and Perth and Adelaide, in the next few years, the supply seems to be increasing at a higher pace than what it has been in the last few years.
So see, you're right. So bring one more perspective to maybe ask you with that bit as well. In all of these cities, so when you see there's a phenomenal growth between Western Australia or Queensland, and poorer growth between Melbourne and a Sydney market.
Melbourne and Sydney,
Did the apartment average price also play a role into it? Because there were cheaper apartments there in the other cities as well, right?
Exactly. So the dollar value becomes more expensive in Sydney side. Sydney is around $700,000 to $800,000 versus the yield factor. In Sydney is around 3.5% to 4.5%. Houses was around 2% and apartment is 3.5% to 4%. But when you look at higher interest rate with around $800,000 apartment, then the out-of-pocket expenses are higher. So it's not too lucrative for foreign investors. In Melbourne, another issue. Basically, in Melbourne, the apartments quantity is extremely higher. So if you look at the supply of the apartment versus the yield, so vacancies are around 8-9%. And then we were looking at the data, and then inventory was around 18 to 19 months. So basically, if you look at the amount of apartment which has been supplied in Melbourne versus the consumption is extremely lower. So because of the higher vacancies and the lower yield, the apartment growth was extremely lower. Versus Brisbane, when you look at the Adelaide and Perth, Brisbane had a lot of interstate migrations. And because of that interstate migration, plus because of the Olympic news, a lot of investors and then housing prices were growing phenomenally. So there is a lot of pressure on the apartment side. Supply towards apartment is lower, And then because of that significant demand and higher rental yields, plus the dollar value is lower, we could see the significant amount of growth in a Brisbane market. Adelaide population growth is not significant, but there is extremely poor pipeline of the apartments. So Adelaide apartment market is a little bit smaller. Similarly in Perth, there is significant amount of growth in apartment market because of the fact that because Perth outperformed the entire performance. First of all, the investors were interested. There is massive migration boom which is happening in Perth. That's why there is a lot of demand from the owner occupiers as well. So when you look at the cumulative things about which state have done well in the apartment side, then probably Brisbane, Perth and Adelaide have done phenomenally well because of all these factors. So we can see the good amount of capital growth. Still the rental yields are in between 5 and 6% in Perth.
All right. So the price dollar value definitely played a role, like you point out, where an apartment which is about, say, maybe 50% lower of price in maybe a Queensland or a Perth, obviously it was giving a better rental yields and obviously was attracting investors a lot in all these years. And that's been the story of last 3 or 4 years.
Right.
But what's the story going forward? What does it look in terms of apartments? How does it look what's the projection? Does it look very stretched or does it look as comfortable? Because I remember, or maybe till now, I think it's all about 30 to 40 or close to 40,000, 35, 40,000 apartments which are getting constructed and released in the market every year across various states. Predominantly 60% of them would be in these Melbournes and Sydneys and Queensland, Brisbane, right? So, but is it changing over the next few years?
No, that is where the whole market seems to be changing a bit now. In the next few years, it is expected, given the construction pipeline is back on track, a larger influx of units is expected. Now, from 35 to 40,000, which we are looking at right now, it is expected that from 2026 to 2029, every year, roughly somewhere between 50 to 60,000, 70,000 units will be released in the market every year. Now, that changes the dynamics. And that's what, Julius, when you were pointing out that currently in city like Melbourne, when the inventory is sitting at 18 months,
18 months, yeah.
Now, when more supply comes in, the growth is, of course, the demand is going up, but demand is increasing for everything. And if so many apartments start coming in, and that too, it also depends on where are they coming up, in a concentrated area or over a spread of area, then the problem of higher supply starts happening. So and because again the construction is happening in corridors in various states, in particular specific areas in various states. So like for example, I stay in Sydney, and I can understand that the western part of Sydney and northwest part of Sydney are the one which are taking the heaviest toll of all this. So that's where the massive construction from Parramatta onwards to Campbelltown and all those areas, right up to Marsden Park and Penrith, and this whole belt which is getting the massive uplift in terms of construction of units which is coming up. So that's going to have a bit of a squeeze in terms of the supply and oversupply which comes in there. Similarly, if you look at Victoria, the largest supply is coming in Melbourne. Melbourne is the biggest contributor for construction. It already is stretched. Maybe we'll talk about some data later on, but there's already a stretch in Melbourne market, and that again is coming up a bit more into more and more supply is coming in there. Similarly, how's the Queensland market? Because Queensland has too much to offer. It has Brisbane, it has Olympics, it has Gold Coast, Sunshine Coast, a lot's happening there, right?
Yeah, so specifically when you look at the Metro, Brisbane and Gold Coast apartment markets, at this stage the inventory is historically low, and then when you look at the last 12 months data, they have inventory shortage around 9%. So inventory is currently around 4%, and it falls short of minus 9% from last 12 months. So at this stage, the amount of supply in Brisbane versus the amount of inventory they had around 12 months ago is extremely low. And because of that gap in the higher demand, plus still the rental yields are better, apartment prices have gone up significantly, and they are still going up.
Okay, so they are going up because of the fact that they are spread across everywhere. The inventory is lower. These markets have a strong demand which is coming from tourism, from people who want to settle there. There's a good net migration into Queensland.
Yes.
There is a good net migration into Western Australia,
Yep.
Perth, which is there. There, obviously, like you touched upon at the start, Adelaide or South Australia suffers from the total population growth, which is why the units market has not taken off there the way it should be. But these two leaders of the market, like Queensland and Western Australia, are because of the migration and are because of the fact that owner occupiers are also happy, investors are also happy, people are enjoying the benefit of apartments, and apartments have been very well received in these areas, right, in these states.
No, you are right. That's how the markets have moved there. There is demand, and especially when it comes to where the apartment is located, what kind of apartment it is,
Yeah.
then it's not, because when we're talking about averages also is when we're talking about the entire city. It's not same across the entire city. There are certain suburbs where the growth is more. There are certain suburbs where the growth is not so much.
Yeah.
So when it comes to the right location and the kind of apartment people are looking for, the quality of construction, all that becomes important. And there we have seen that the prices have gone up. The inventory has come down in cities like Brisbane and Perth, especially.
Yeah. The other markets are pretty small to really touch upon. So I think the Canberra market is good. It's big, but it's not so big that though the apartments have taken off well there, have been very well received there, and people are pretty happy with living there.
Yep.
But still, it's a smaller market and similarly, is I think Northern Territory and Tassie are pretty small markets to really have a significant volume to impact national data, right?
Yeah, the sample size, when you compare the sample sizes about the entire national cumulative data,
Yeah.
then Northern Territory, Canberra, and then Tasmania has very small share. So basically, that's not a great sample size to compare with how the apartment market will go up significantly, because apartments are not very well received within the owner occupiers. Property prices in Tasmania are significantly lower yet in terms of the housing. That's why it might take a little bit of time to take a kick off the apartments.
Yeah, that's true. And in fact, if you look at loan side, then if you look at how the loans are getting distributed, I think even 65% of loans are still originated across in totality with owner occupiers taking in, and that's how the market has been right now. And when investors are, obviously the remaining part is the investors bit, but that itself is also changing shape across various areas. The interest rate regime, the way money is lent across to units, which is becoming easier and easier, both for off the plan ones and existing ones. That's also making a move. That's also allowing people to be able to get ownership of apartments and making them more popular right now in these times, right?
Absolutely right. And that the loans data also gives us an indication of how the ownership of investors versus owner occupied is changing. And you're, like you rightly mentioned initially, that the government schemes which are there, they have given a push, definitely a strong push towards first home buyers, people who are looking to buy first property, and the affordability. They are able to afford a property where they can live and in a decent good lifestyle that they've been looking for. So their units are playing a good role there.
Yeah, and that's a good point it brings across, investors versus owner occupiers. So when we are looking at investors versus owner occupiers, though the total market is still skewed maybe 65-40, 35 or 60-40 towards owner occupiers versus investors, how does it look like in terms of the unit space in the last few years, in the last recent couple of years, 2-3 years, if we talk of, how is it taking off in various states?
In various states, it depends, but Queensland has the largest share. So investor share is around 52%, versus owner-occupied share is 48%. Largely, Victoria is around, in owner-occupied stump is 55% versus investor is 45%.
Yeah.
A lot of investors are offloading because of the government schemes and then tax issues. In New South Wales, it's moderate. The owner occupiers are around 52% versus investors are 48%. Western Australia is 50-50, by the way.
Yeah.
There is a significant demand from the owner occupiers.
Yeah.
as well as the investors from all the other states, because when the market kicked off that time, the apartment was extremely on the low prices. And that's why when we see the returns over the years from the apartments, in terms of the capital growth is extremely higher. In Northern Territory, owner-occupier share is 65% versus investor share is 35%. And for the ACT, it's around 60-40. So in total, across Australia, owner-occupied shares in apartment is 54% versus investor share is 46%.
All right. So, okay, still it gives us a good flair that we've got a majority in the recent past have been investors in various states put together versus the owner-occupier. Now, that's very different from what happening on totality basis. Maybe houses skew it towards the other end, but in the apartment market, this is very interesting. And let's go state by state. So Victoria, I suppose we've been speaking. I think another thing which is played in Victoria has been the land tax regime.
Yeah.
What's happened there? So people have been, because of the land tax which is there, people have been offloading houses and units being lower in size, so lower land tax. So maybe investors have taken off more there. But I've seen investors even trying to move out from the apartment side as well. Sydney, I think, is more rental yields, right? That's why investors are coming more into apartments and the benefits which you get here in terms of owning the apartment, right?
Yeah. So Sydney, specifically, they're owning the apartment because a lot of owner-occupiers are not able to afford the houses. So with their limited deposit, and if you look at the Western Corridor, the apartments are still in affordable range, even though the rental yields are lower. That's why we could see there is a significant amount of portion which is going from the owner-occupier. There are a lot of apartments which are releasing in the market in Western Corridor where the yields are in between 4 to 4.5%. So those investors who couldn't balance their portfolio and they have to get into, or sometimes few people would like to get into the apartment market, especially in the backyard. That's why they try to get into the Sydney. So or else there are no special incentives when you buy an apartment in Sydney. But in other states, specifically when you look at the Perth and Brisbane, investors made a lot of money in apartment space because in terms of the dollar value, they are smaller. So those who have a minimum affordability to invest the money, and then, for an example, borrowing capacity is limited, deposit is limited, but still, when they've got an opportunity to buy an apartment in Brisbane or Western Australia, the amount of money which made by the investor is significantly higher.
All right. No, that's an interesting take on how the apartments has been taken off in various states, right?
Yeah.
And anything else you would want to look at?
No, so what has happened is that what I think the rental yield, which plays an important role from an investor's perspective, the sustainability of you being able to hold a property or hold an asset, that becomes a very important factor when investors, like we know that timing the market and also how much time you spend in the market. So from that angle, because houses overall have gone lower on the rental yield, investors have become more comfortable in getting some kind of rental yield which can help them sustain for a longer period of time. That's one reason why investor share in the recent past has increased at a faster pace than how historically it has been.
Yeah, and I think the falling rate of interest has also really helped the investors to be able to take an ownership in the properties, right? And that's helped them to, with a good rental yields which are coming through, lower rates which are going through, you're able to have better ownership of the properties which you're wanting to buy, and you're able to afford to have those properties, right, as well?
Yes. And that's the biggest reason then why we have seen there is a significant amount of incremental share of buying an apartment space in multiple states, and that phenomena will continue for a longer time. But when you look at the futuristic data from 2026 till 2032, that the proposition is going to be changed because of the fact that, as Mudit rightly pointed out with the data, from 2026 till 2028, every year there are going to be around 60 to 70,000 apartments going to be delivered across the country. Current share is around 35 to 40,000 apartments.
Yeah.
So it depends on where you're buying an apartment as well, and then what kind of apartment you buy as well. So for an example, I've seen there are a lot of investors offloading the apartments because of the fact that they bought an apartment somewhere where it's oversupply of apartment, and then when you're buying an apartment, you should know the exit strategy as well. For an example, you're buying in a location where they have 200 houses. and if absolutely there is no land supply available, then it's not possible that you could see oversupply of the houses. But if they're a developer who can buy 4 or 5 houses together, and then they can build 3 or 4 apartment complexes, and then you can suddenly have a 300 or 400 apartments oversupply. So that's why when you're weighing the options about where to buy the apartment, what kind of apartment, it should come with this exit strategy as well.
Yeah, that's true. No, that's right. And exit strategy is so key in when you're looking at an asset, and especially when you're looking at apartments, considering they have an inherent risk of an oversupply because of the way government is coming into it. They're now trying to rezone a lot of areas and all that. So that also brings pressure on the existing areas. But how have been the rental trends? Are they supporting the existing units across? Are the rental trends in the last few years supportive of the way the states are growing? Like we spoke about various states growing at a various pace now. So is the rental trend also keeping up with the way the property prices are rising there? Because WA, I'm pretty sure, has been a market leader, right? It's been a leader in rental affordabilities and the returns which people are getting. So what about the other states?
It depends on what's the dollar value and which state. But because from last 3 years, apartment in few states, apartment have given a very good growth. So the prices have risen a lot, and then there is not significant rental prices. So if you look at the yields, then New South Wales is around 3.9%. Victoria is around 4.2% in apartment space, but there are more outgoings because of the taxes. Queensland is sitting at very close to 4.9%. Adelaide is around 5.3%. Western Australia is still at 5.8%, which is extremely good. Tasmania is around 4.6%. It is around 5%, and Northern Territory is surprisingly 7.9%.
That's a good growth. Now let's pick, say, the Northern Territory is a smaller market, so I would say let's skip that market. So Queensland. So what's the driver of the apartment rental yields in Queensland? Because it's also growing in prices, and if it is still having a 5% plus rental yield, which is coming from there, is it so because it's not only a choice state where migrants are moving to, but they're also willing to pay a higher rent for living in those areas, and are also taking up apartments in a big way, right? So on an overall basis, I think Queensland's cracked it. Like the apartment market is like going gangbusters there, and everything is kind of falling in place there.
No, you're right, and we can, like you said, we can explain it from the supply and demand, and we look at that because of migration, people are moving in there. The demand is there, but Brisbane, the supply has been still limited on the unit side. It has not supplied units like Sydney and Melbourne have done. So the constraint in terms of how supply has happened, plus at the same time the demand is still going on with net migration happening there. We have seen better rental yields there. And there again, where is it located? For example, apartment which is in Gold Coast, let's say facing the sea, you will see even better rental yield there. And despite the prices going up, and prices going up across whether houses and units, the whole wave of Olympics has driven the prices up, but because of migration and lesser supply, still the rental yield is higher.
Inventory is historically low yet, and over the year, the inventory is still shrinking. That's number one. Second thing is, when you look at the renting affordability in Brisbane is extremely higher. So people are still paying less than 30% of their incomes towards the rentals. You still have extremely low availability of the apartments, extremely high demand, and then good renting affordability. That's a combination why the rental yields are so strong.
And so, okay, let's talk about maybe even Adelaide market here and South Australia market, maybe not Adelaide, and also talk about, let's say, Tassie market. So they've not been, we've spoken about that, they're not historically large apartment market. But so what's holding South Australia back? Is it the only population growth? Because rental yields are good and vacancy rates are very, very low in Adelaide. So you will have less than 1% vacancy rate anywhere where it is in Adelaide. So what holds it? Is just the population which is holding it back, or there's anything else as well?
No, it's about buying affordability within the houses holding it up. In Adelaide, Adelaide has gone significantly, but still the buying affordability is better. And there are a lot of surrounding places of the Adelaide, you don't have to get into the fringe, but if you just get into around 15 to 30 kilometer within the Adelaide CBD range, then you can still afford property for $650,000.
Yeah.
So when you're saying, Julius, buying affordability, you mean buying
Within
affordable for
houses.
houses. So the difference in the price of house and unit is not so much, and that's why
Not
people
extremely different,
people would comfortably buy a house instead of a unit.
Exactly. So when that gap will be widened, then we could see there'll be more pressure towards apartments.
And we see a market like Sydney where the price, if you're looking for a certain suburb, let's say near the CBD, then the difference in the price of house and unit is so much that if you want to live there, very, very high chances that you can't afford a house there. You will buy a unit there.
So basically what's happening is that the choice becomes wider, that for the same $500,000, I have a choice of buying an apartment or I have a choice of buying a house, so I can choose any. Whereas in the other states, for a $500,000, I just can't buy a house. So that segment has moved to $1 million. So now it's like apples and oranges. So I either have to go on that side or I have to on this side. So my choices become narrower, and it has come down. It has shrunk down to, okay, you are going to buy apartments in this suburb because that's what you can afford, or you can buy houses you can afford more, and so on and so forth. So that's maybe driving a South Australia or a Hobart or these markets, which are smaller markets, to having very low vacancies, but because there's not too much of a supply, and then the price differential between houses and apartments is not much, hence they're fine with it, that okay, I can choose what I want to buy, right?
Yeah.
Correct. Absolutely. That's the right analysis on that. Yeah.
All right. So and rate cuts definitely have been a driver for the investors in this market. So rate cuts, rental returns, and rental yields which are there have really helped all over across Australia in helping us grow in the way we wanted to grow, or the apartments want to grow, or people make a choice about that I want to go as an investor, because still on an intrinsic basis, on an overall basis, if you look at the total market in Australia, you will still have a large proportion being owner-occupiers, but recent few years of purchases of apartments is more driven by investors and vice versa. But what happens when let's say first few years, 2 or 3 years, or maybe 0 to 3 years, you'll have someone who's come into the off-the-plan apartment. So what happens when he sells it? Does that change shape, or it is still skewed towards investors there?
It is more skewed towards owner occupiers.
All right.
So if as an investor, if you bought something and once you sell it,
yeah,
a lot more percentage of those go to people who want to live in there. And that's because ultimately, like we're saying, that affordability, demand, all that mix is making people buy to live in. And still, in terms of as a overall percentage of people owning properties in Australia, it's still not very high as investors, right? So they are still more skewed towards owner-occupier, and that's why most properties are still owner-occupied overall in Australia.
Yeah, so again, so in an apartment, so when you're looking at it, so obviously the overall sales volume, if you look at the whole family of apartments, new ones plus existing ones put together, the obviously, because the total apartment size is very high, but the sales of still the existing apartments must be outpacing the sales of newer apartments, the off-the-plan apartments. So that also brings across the other elements into it, the first-home buyer benefits coming into it, the existing apartment stock, which is easily affordable and easily available coming into the market, and that accessibility is easier, and people are able to have, like we spoke about, certainty and all that which comes in. So the sales volume obviously goes higher for the existing apartments and versus the newer apartments as well. Even buyer preference is also something similar, right? Buyer preference when it comes to if you look at the whole stock of existing and the off the plan, the buyer preference would also be driven by their short-term needs, their immediate needs, or versus long-term needs. And that's why you will find that the owner-occupiers are still more and the first-home buyers are still more, because I want something to live in now, right? And that existing apartment still gives me more visibility on that.
You need more certainty when you're looking for a property. When we look at the sales volumes, right, in existing use, you have something which you're going to buy and live in there. So you know that you're going to buy that same apartment, which you can see, or which you don't have to visualize the thing. You can go and buy it and then start living in that. In terms of the off the plan, the biggest issue is in a case if suppose developer books the site, if they can't pre-sell 70%, then it's an issue. That means you're going to lose time.
Yeah.
So that's the biggest problem. The second is basically process and timelines. So nowadays, a lot of developers, either they're going through the dodgy constructions or timelines are extended to 2 or 3 years. That means by the time you book the apartment, I've seen a lot of horror stories where you book an apartment and then you get the delivery of that apartment in around 4 to 5 years. That means you're wasting the entire 4 to 5 years of time in a single apartment journey. So for an example, by the time it's settled, you are going through a lot of uncertain situations. Like you can't invest in any other property because you have to commit and you have to settle that property. You have to depend on the valuations of those apartments. Because in existing, it's in front. So you can value it and then yes, if the bank says okay, then you'll go and buy the property. In off the plan, there are a lot of markups been added towards those apartments. So they're extremely expensive. And then when you go towards the valuation, and if the valuation doesn't come through, then you have to pay that shortfall.
Yeah.
So there are like a lot of uncertain scenarios within when you don't know how that the entire apartment is going to be look like, what would be the valuation, and then in next 3 to 4 years down the line, how many percentage of the apartment market is going to be increased, plus or how much supply is going to be infused in next 4 to 5 years.
Yeah, but they both have their fair share of risk. Definitely, like you say, the newer ones will have their share of a risk of the project not coming to live or they getting delayed unnecessarily, and all that gets extended. But similarly, the existing one also have their problem. Definitely have a higher strata fees because a lot has gone through in the building. There's a lot of maintenance has already come through. So you have that bit which comes to you as well. Plus, there would be plus the benefit is obviously there that it's there in a area which and you know how it is behaving. But still, the strata cost, the overall cost, they come into a play. But I think certainty is also there. So pricing wise, sometimes even if my off the plan apartment is a bit cheaper, though they are not cheaper, but still I would know what it is, but this certainty gives me, and that certainty is also allowing people to make money and make profits on existing apartments versus the newer one where the uncertainty kills. That's why I suppose that investors are early adopters of the plan or a newer apartment, but eventually when it sells, then it is passing hands to more owner occupiers because they can see the certainty and they say, okay, I am taking my first home buyer benefit, I am taking my stamp duty benefit, I am taking my all this benefit, but now I'm taking something which is more certain. So if it's 2, 3 years, 4 years old, it's still newish for me and I'm happy with it, right?
Yeah, because they also they want to move out of the rent that they're paying, right? So the paying rentals have gone up, so they're paying through the nose. If you talk about migrants who have migrated to Australia or the new generation, they are generally short on savings and they want to buy something, they want to save money, they don't want to pay the rental. So if something is ready, they would prefer moving in straight away rather than waiting for another 3 or 4 years. A lot of people wait for the off the plan and wait for that if they don't have savings enough to be able to buy those. So then waiting for 1 year, okay, in this period we will have more savings. Currently, let's say somebody has only 30k savings and they want to buy with that, but they want to buy something and have another 30k saving and then they want to wait for it. So off the plan makes sense in those cases, but otherwise buy, move in, save rent, and it's the certainty. Definitely there's a high cost, high value of that certainty.
Absolutely right, and that's what has been driving the sales volume. That's what has been driving the transactions which are happening in the apartments market across various states. A lot of this is obviously this government schemes driven thing, but it's also investors getting into the existing one and the newer ones as well, where they can find value, and wherever they find value, they're jumping onto it, right? Yeah, and you've seen that trend state-wise as well, correct?
Yeah, we often do see that trend state-wise, especially where, and then it has a significant positive impact on where there is extremely a lower supply of the apartments. So basically, when we have witnessed the extremely high growth in Brisbane or Adelaide or Perth in terms of the apartment value, that's the reason because when the investors when the owner occupier start buying the properties in terms of the apartment market because of either the lower buying affordability or lower amount of deposit or the borrowing capacity, due to that the lower entry into the market, when we see the apartment market have moved significantly, people have made a lot of money. So state-wise, when we see it is outperformed.
Absolutely right. And the inventory volume, like you spoke about at the start, inventory volume has really made an impact on the way it is happening in the various states. And it's been interesting. It's been really interesting to see how various states have really come up. And I think there are two outliers when you look at inventory volume. So one of the outliers is on the bad side, which is Victoria, which is now having a really, really big problem with the inventory of apartments which are there in the market. I read it somewhere that it's as high as 18 months of inventory lying there in the Melbourne market versus Brisbane, which is eating up into inventory, and it's gone the other way. And now you have significantly less stock versus what it was 12 months ago. Is that right?
Yeah, I have a right data for that. So when we look at the Sydney, the inventory is around 7.1 month. When you look at average 12-month listing, 12 months ago, the listings were around 1,519.
Yeah.
Versus at this stage, it's only 1,650. So that means it's 9% incremental into the stock or inventory. Melbourne, 12 months ago, it's 1,251. And the current stock is 2,201. 76% incremental value in apartment sizing. It's extremely high. Inventory count is 18.3 months.
That's a big increase. That's 3/4 increase. That's a 75% increase in the inventory level over a period of 1 year, and that's maybe largely contributed by investors exodus, which is happening from Melbourne, and apartment market unfortunately is suffering the most there. But on the other side, the other states are now so much lower in the inventory, and that's, I think, holding on to the prices. Like we saw at the start, the growth in the property prices of these two or three states like Queensland and Western Australia have predominantly been driven because inventory is going down. People are willing to buy. First-time buyers are willing to buy. Investors are willing to buy. They're getting good rental yields, and hence they're getting a good price growth as well in these areas, right?
Correct. That's how these markets have moved. On the contrary, like we said, Melbourne, but there has been demand, and the supply has been relatively limited. Good for people who wanted to buy.
Yeah, absolutely right. And that's why owner occupiers and first home buyers and upgraders, they're all are keenly looking at these kind of markets and adopting these states very, very well. Despite of all of this, even Sydney's been is done fairly stable with about 7-8% of an increase in the market. But Sydney also commands, in fact, Sydney and Melbourne to an extent, but Brisbane a lot in a larger volume, commands niche in owner occupiers who would look at luxury properties, who would look at some really, really nice properties. Western Australia has some really luxury apartment blocks and available, which people want to, and they are also a type of owners which are looking at that. Those numbers of properties may be fewer, but that's a good choice of thing, and those properties really command values as well as any other security would command a value, right?
Yeah, of course, yes. It depends on where you buy an apartment. So for an example, when you look at the value proposition between the houses and the apartment, if the gap is significant. For an example, if I want to buy an apartment in Coogee, the house value will be around 8-9 million. But if I would like to live there, I can afford only $2 to $3 million. Then definitely I can go there and buy the apartment. I can still have a similar lifestyle. Those type of property always holds the value. And then when you look at the growth on that segment, it is extremely higher.
Absolutely right. So that's a good point. So what brings a good capital value growth to an apartment? Definitely something where obviously there is a large differential between a house price versus an apartment price, but is a choice suburb. So I have a choice suburb, but I find that the difference is very high between the two. It's very, very skewed away from the apartments. So I would go and prefer to own an apartment in there, and hence the apartments are also becoming good value, are rising in value there. But whereas the suburbs where you do not have such a thing, and it's not a choice suburb as well, the apartments are struggling a bit. So you will have two markets, like say eastern suburb market in Sydney versus a western suburb market in Sydney, where the western suburb would not have moved too much, whereas an eastern suburb market is still growing strong and still attracting investors and owner occupiers in large numbers into and at a good price point and making profits as well there.
Correct, you're right. And the whole idea of affordability and convenience, that I want to live here, that's convenient for me, the lifestyle I want there. So these factors play a role when people are thinking about buying something, and definitely that's a big difference between eastern and western suburbs, how the units have moved.
Yeah, correct. So definitely Sydney's eastern and western divide has a very clear example, not divide, so the kind of market which is the toothpaste market which moves in within the same city clearly shows the value which a location or value which a choice and where with people prefer to go will give into the apartment market versus something which is there which is not niche, which is usual, so that may or may not grow as fast as the other market would be. Convenience, like you said, that's a very important thing. So the combination of a convenience and affordability again is a good driver for the property price.
Plus demand and supply.
Plus demand and supply. Obviously, yes, correct.
Yeah. Supply side, when you look at the Western Corridor, from Parramatta till Penrith, there are like huge supply of apartments are coming up. When you go towards the eastern suburb, hardly you'll see the apartment spaces. So because there is no land to develop.
Yeah.
So the demand and supply has a lot of gap. The affordability, choice of suburbs, as you say, they are the real driver for the apartment prices.
Yeah, and that's why again with going back to the Queensland market, but it's so easy to go back there. So much good happening there. Western Australia market, so much good happening there. That in Queensland again the driver has been the Olympics and the Gold Coast, the ever shining Gold Coast and the Sunshine Coast, and I want to be there. And then so that's a good driver of business in this state as well. Similarly, Western Australia, the rental returns are so good. It's just moving investors along with it very well. Owner occupiers are also happy with the apartments. They've not had as many share of construction problems as the other states have. So overall that has done very well to these three states in terms of the apartments market, right?
Yeah. Significantly, yes. So Perth, Brisbane, followed by the Adelaide, have done extremely well. Melbourne and Sydney were a bit okayish from 2022 to 2025.
Right, and so if okay, so let's come back to what we are saying. So when we are saying that there's a growth which is happening in these markets, and when there is a growth, which are these factors which are contributing to growths in these markets, what are the risks which come along with the apartment market with it? So there are some risks which we have to take care of when we are looking at a market to invest or to go and stay in.
Absolutely. So I think that becomes a paramount factor to keep in mind, that the market has been growing, but what goes forward? So like we discussed, supply is one of the biggest risks. If there's a massive supply coming in or significantly higher supply coming in, then you need to be aware. You need to understand what kind of projects are coming in, what kind of approvals are happening, and keep the supply factor in mind. If the area is bound to get more supply, the chance of growth will be lower. That is for sure. Second important factor is that how is rezoning happening? Are there chances of any rezoning happening? There have been a lot of suburbs in the last few years, you will see across multiple cities, where government has changed policies around rezoning. And if you're holding an asset there, people have been holding properties there because they have been expecting that rezoning will happen. Parramatta, Westmead area, that's a clear one of the examples in Sydney where people have held properties for long expecting rezoning to happen. So that's gold.
Yeah.
But these are things to keep in mind, right? And if there is something that you know that, okay, oversupply is going to happen, rezoning, we don't know what's going to happen. So that's a big risk there. Now, another risk is what kind of builder is involved in that. So if you have to figure out, and I mean, it's not easy to figure out, I would say, but stay away from builders that you're not confident on, which have some past history of some project deliveries where there have been issues. So construction quality is a big risk. So these are some important risks to keep in mind when you're thinking about investing.
Absolutely right. Yeah, builder reputation over these last decade or so has taken a forefront in consideration for the risk when we are investing or looking at buying into an apartment to stay into, and this factor does count into play when we are looking at trying to assess the risk of investing into an apartment. But a good point which you guys have brought forward is the way government is changing policies, the way zonings are getting changed, and the way oversupply is coming in. Suddenly an area which has only about 50 units with a big site getting auctioned or something happening there, large land parcel getting released, will have some 5,000 apartments, and it's all destroyed. The value which the existing apartments had or houses had or everything had suddenly goes into a different tangent altogether. So that concentration risk is something which always has to be measured when we are looking at an apartment, when we're looking at an area to invest into or an apartment block to choose for staying into that as well. But along with this, when you're looking at this risk, what are the holding cost risks when it comes to buying an apartment? There are other costs which are standard to any property which you have, a house or something, you'll have rates and all that stuff. But strata, right? How big a role does strata take into account when I am taking holding cost, which is also a risk for me, right?
Yeah, strata is a big risk because when you look at the existing apartment versus the neighbor apartment which are releasing in the market, existing apartments strata is a little bit higher, but when you go towards the apartment which are more luxury, for an example, it's around 50-story building where you have a pool, spa facilities. Sometimes you have the parking lift. When everything is fine, it's hunky-dory. Yes, the strata cost is manageable, but over the period of time, when you have a large maintenance into the building, when the lifts are not working, sometimes pool maintenance is there, then that money is going to be distributed across all the stakeholders in that apartment. So strata costs keep on increasing. And I've witnessed that with one of the investor where they bought an apartment in Parramatta for $560,000 in 2016. They got a big parking lift for destroyed, and then it's a big bills to each and every investor. They were liquidating that apartment in 2022 for $510,000.
Oh my God.
It's $50,000 risk. So that means strata can play a major role. So whenever we look for an apartment, right? For an example, if you're an investor, then look for properties or buildings where it's not more than 3 or 4 story. It's an older building where you can hold the land. And if it will go to the redevelopment, then probably you'll get more money. Look for the apartment complexes where the amenities are not too many. When you are an investor, when you're looking for yourself, and if you want all the luxuries to be counted, then it's an emotional decision.
Yeah, absolutely. And when you're buying something, I think to go through the minutes of meeting of the strata, to understand the strata report, to see if there are going to be some special levies, to just see the balance sheet of that strata, to see if they are having a shortfall, and there's a chance that suddenly a lot of fund is going to come on to you, starts becoming very critical. Like you rightly said, I've had clients, and I remember one client which long time ago, they had bought into an apartment block which they really liked, and they said, okay, my child can play there and we can go from office, it's pretty close by and all that. And eventually within a couple of years they bought it for some, I think 480 or 500 or something of that sort. And that time they had 50 grand special levy because of a lot of stuff which they had to do in the apartment over a period of 2 years, and they really bled through trying to pay that off. So that's another risk which you have to really take into account. That's a big red flag, not more than a risk, it's a red flag which you have to see when you're looking at buying an apartment or investing into an apartment like that. Is that right?
Yeah, correct. Strata, special levies, and potential, the older the unit gets, there will be some more maintenance apart from strata inside the apartment also. So these are things to keep in mind. Otherwise, you'll suddenly find yourself in a situation you don't want to be in.
Absolutely right. No, that's a good chat, gentlemen. I think we've spoke about a lot of stuff today. And if I were to really talk about what would be my takeaway for today, quite a bit of a thing. But see, one of the biggest takeaway for me is that though we are seeing that there is short-term growth which is happening in apartments in the unit market across the various states in the country. But this, it's a two-paced thing. So not every state is moving there. Not everything is going well in all of this. But there is, like we said, there's a lot of supply coming in 26, 27, 28. And that's going to change the dynamics of the apartment market. Maybe that whole oversupply is going to sit like a big blob on the state's growth, and that may really curb the growth down for the apartments a bit. So that has to be taken into account. That oversupply factor has to be taken into account in the various states. Now, that's a very important thing which we have to see. And every state is reacting in a different manner. Every state is working in a different manner in all of these things, right?
Correct. And I think the second takeaway for me is that rental yields play an important role. So you need to understand, and those are varying a lot across different cities. So need to understand the rental yield, because that will ensure sustainability of whether you can hold that apartment for longer or not. That's a very, very key factor to keep in mind, cash flow. And the third one is the risk that you have to consider before you get into, and the risks involving the special levies and the strata and the kind of maintenance that may be required. These are important parameters to keep in mind before you say that, okay, this is a unit I want to invest in.
Yeah, so few takeaways are like, if you are an investor looking for an apartment market for your affordability, then look for the places where the oversupply of apartment are not extremely higher. Don't look for luxury apartments. Higher the luxuries are, more the strata cost are, more the special levies, and then strata cost is going to be increased significantly. Look at the apartment complexes where they are little bit older, very less amenities, around 2 or 3 story buildings where the land component in your share will be much higher than you're getting into the 50-story building.
Yep.
And the cash flow is also very important. So according to the current projections, there should be an exit strategy as well. Yeah. If you bought an apartment, for an example, in any state, wherever, if you significantly got around 15, 20 or 30% growth, between 2016 till 32, there will be extremely oversupply of an apartment. If you can hold it with the amount of income which is coming into an apartment, it's a great place to hold it, or there should be an exit strategy.
All right, yeah, that's true. And then we should be able to look at the risks and the costs which are going to come along to me with all of this. And if we are looking at all of these factors, and if we are able to keep all of these factors into mind, it's still a good market to invest into a lot of states.
Yep.
It's an average in some state, but a good market to invest in. And I hope that whenever someone wants to they can make a good decision out of how they would invest into an apartment, and whether they would want to live there or they would want to invest into that one.
Absolutely correct. Based on what how you want to build your portfolio or think about things in the long term, apartments can play a role there in your strategy. Yeah.
Yeah, absolutely.
All right. Okay, guys. Now, thank you so much. Good chat, man.
Yeah, it was wonderful. Thank you, guys.
Thank you.